Welcome to this deep dive. Today we're digging into the Boston Beer Company's first quarter earnings for 2025.
Yeah, quite a bit to unpack here. Some interesting signals in a, well, pretty challenging market.
Definitely. So quick snapshot, depletions, what's actually selling through, dipped just 1%, but shipments to distributors, those jumped 5.3%.
Right, and revenue is up too, 6.5%, volume and price helping there.
And the big ones, gross margin shot up to 48.3% and earnings per share, more than doubled, $2.16.
That margin number really stands out. It suggests they're managing costs pretty effectively, even with some softness in demand.
So let's talk about that shipment versus depletion gap. Shipments up over 5%, depletions down 1%. What's the story?
Well, the main reason seems to be stocking up. Distributors are building inventory, likely for the big summer selling season.
Okay, getting ready for demand.
Exactly. And also pushing some of their newer stuff like Sun Cruiser, Truly Unruly, Hard Mountain Dew, getting those into more places.
They said they've got about 5 weeks of inventory out there with distributors. Is that normal or a bit high maybe?
They seem comfortable with it. They stated it's appropriate. But yeah, it's something to watch. If summer sales don't quite meet expectations, that inventory could become, a bit of an issue.
Right, a potential overhang. Depends on how strong that consumer demand really is.
Precisely. It's standard practice before summer, but there's always a risk if things slow down more than expected. We'll need to see how those depletion trends look in Q2.
Okay, let's shift to the brands. Twisted Tea, still a monster, over 86% share of hard tea, but dollar sales only grew 1%. Seems like a slowdown.
It is slower, yeah. Still growing, but not at the crazy pace we saw before. The category is getting more competitive.
So their plan is more advertising, more distribution, pushing that Twisted Tea Extreme nationally?
Right. And those new extreme flavors, lemon and blue raz, are apparently doing well, bringing in new drinkers, which is key. They're forecasting low single-digit growth for the full year for Twisted Tea overall.
Trying to re-accelerate things.
Yeah.
Make sense? What about hard seltzer? Truly.
Still a tough spot. The whole category was down about 5% in dollar sales. Truly's performance. Well, they acknowledge it needs work.
So more ad spend there too, a marketing refresh.
Yeah, increased investment, new partnerships, trying to stabilize things. But the bright spot, interestingly, is Truly Unruly.
A higher ABV version.
Exactly. That one's actually gaining share. Fits that trend towards, bolder, stronger options in the beyond beer space.
Interesting. Okay. On to beer. Samuel Adams.
Seeing some positive signs, apparently, from the national launch of American Light, helping them get shelf space, even though craft beer overall is kind of struggling.
And Dogfish Head.
They managed flat depletions. It seems like that Grateful Dead Juicy Pale Ale launch really helped them out there. Innovation paying off.
And cider. Angry Orchard.
Still number one, over 40% share. They're hoping new marketing can get it back to sustainable growth.
Okay, now the newer bets.
Yeah.
Sun Cruiser, the vodka hard tea.
Meeting expectations, they said. And importantly, it's helping their gross margins. Good profitability there.
And they're really expanding distribution for that one, right? Tripling it by summer.
Yeah, big push. National chain rollout happening. Looks like they have high hopes for Sun Cruiser.
And Hard Mountain Dew.
Also looking positive. Third straight quarter of positive depletion trends. They're expanding into Texas now, launching the Code Red flavor too. Seems like that partnership is working.
So these innovations are pretty crucial then, diversifying away from just beer and seltzer.
Absolutely. Sun Cruiser boosting margins and Hard Mountain Dew finding its audience. That's exactly what they need.
Let's circle back to that gross margin, 48.3%. You said brewery efficiency was a big part.
Yeah, lower processing costs because they produce more volume, plus general efficiency gains. Also, pricing helped and some procurement savings on materials.
But offset partly by inflation, of course.
Always a factor these days. But overall, a really strong improvement on the margin front. Gives them more firepower for that increased marketing spend we talked about.
Okay, looking ahead, full year guidance, earnings per share, they're sticking with $8 to $10.50.
Right, but that excludes the potential hit from tariffs.
Ah, yes, the tariffs. Mainly aluminum, some imported point-of-sale stuff. How big could that impact be?
They estimated it could be $20 to $30 million, or about $1.25 to $1.90 per share. That's not insignificant.
Wow, yeah. Yeah, and that starts hitting in Q2.
Supposedly. They are looking at ways to mitigate it, but it's definitely a headwind to watch.
And volume guidance for the year, still down low single digits to up low single digits.
Yep, holding that range. But based on current trends, they suggested it might land somewhere near the midpoint. So maybe flattish, give or take.
They mentioned things like inflation, economic uncertainty, even the timing of Easter impacting recent category weakness.
Yeah, the usual suspects affecting consumer spending right now. It makes forecasting tricky. The summer performance will be really telling.
And operationally, sounds like progress on efficiency continues. Procurement, breweries.
Yeah, they highlighted procurement savings, better brewery efficiency. They mentioned hitting 85% domestic internal production now, which helps control costs, and being more disciplined with inventory.
Good foundational stuff.
Exactly. Helps build resilience against those external pressures like tariffs and inflation.
So putting it all together for someone looking at the company, it's kind of a mixed bag, isn't it?
Very much so.
Yeah.
You've got clear strengths, like Twisted Tea's dominance, even if growth is slower. And the innovations like Sun Cruiser and Hard Mountain Dew seem promising. Margins are way up.
But then you have the challenges. Truly and the seltzer decline, the overall softness in demand, and now these potentially significant tariffs looming.
Right. So the big investments in marketing for Truly and the distribution push for Sun Cruiser, those are key strategic bets. Investors will be watching if that spending pays off in better depletion trends.
And how badly those tariffs actually hurt the bottom line.
Definitely. Twisted Tea's performance and whether Truly can find its footing are probably the crucial things to track for the rest of 2025.
Okay, let's move into our This Is Not Financial Advice segment. Time for some outrageous but plausible trade ideas based on all this.
Always the fun part. Okay, hit me.
All right, idea one. Given Twisted Tea's strength in market share, plus the extreme expansion, how about going long Boston beer, but hedging it by shorting a big convenience store chain ETF?
Okay, explain the thinking there.
The idea is Twisted Tea is such a huge driver in convenience stores. If it keeps performing well, it might disproportionately benefit Boston beer relative to the overall C-store sector, which could face its own economic pressures. Twisted Tea pulls people in.
Interesting angle. So betting on Twisted Tea's specific strength within that channel, the risk, obviously, is that Twisted Tea falters or the whole convenience sector gets hit harder than expected, wiping up the hedge.
Exactly. Plausible, but definitely outrageous.
Okay, yeah.
Your turn.
All right, idea two. Focus on Sun Cruiser. They're tripling distribution. It's boosting margins. What about a pairs trade? Long Boston beer, short a competitor who's still really heavily reliant on hard seltzer and doesn't have a hot margin-friendly innovation like Sun Cruiser coming up.
So betting on Sun Cruiser's success driving Boston beer's growth while the seltzer-heavy competitor lags behind.
Precisely. You're betting that Sun Cruiser helps Boston beer navigate the current market shifts better than a competitor stuck in the declining seltzer space.
Makes sense. Risks there. Sun Cruiser doesn't take off like they hope. Maybe distribution gains don't translate to sales, or, plot twist, the hard seltzer market suddenly stabilizes or rebounds.
Yep, those are the big ifs. Again, plausible, but carrying definite risk. Not actual financial advice, folks.
Absolutely not.
Okay.
That wraps up our deep dive into Boston Beer's Q1 2025 earnings. A lot going on there, shifting demand, strategic bets, those tariff clouds.
Yeah, definitely a company navigating a complex moment, lots of moving parts.
We hope this breakdown gave you a clearer picture of the key takeaways. What surprised you? What are you watching for next quarter? Things to think about.
For sure.
And just a final reminder, this was our analysis based on the information presented by the company. Always do your own homework before making any investment decisions.
Couldn't agree more.
Until our next earnings breakdown, that concludes this deep dive.